welcome back to Robinhood Stock Market Watch List. This is our famous Facebook stock market group. My name is Carlos. I'm the administrator and creator of the group. Today is Sunday the 8th on December 2024. It's been a while since we've had our stock market meeting. This is live, and there are people that will join in and out throughout the meeting. And so one of the things that we always like to talk about is the current activity, but also what's going to happen before it happens. So let's go ahead and we'll dive in. First, let's take a look at what just happened recently on Friday evening. Looking at a website that we like to look at a lot is with that information is through barchart.com. Let's take a look at the most active stock options. Get rid of some of these ads here really quick. And so this page will reveal the most active stock options for just last Friday, just the other day. So sorted out by options volume. And so options volume is the current day's buying and selling activity. And so this page will allow us to kind of see that kind of activity. This is kind of our screener, it's our radar. And so we need to make sure that hold on here. Had to mute you really quick, Wendy. You just had some background noise there. So the interesting thing about this, though, is that we see the call and the put ratio. We can see whether it's the majority of calls or puts. Now, if you don't know stock options, calls is betting the stock goes up. A put is betting against the stock, betting it goes down. For example, NVIDIA was first place with over 4 million in options volume. We had over 63 in calls, or 63% in calls. Third, just a shy under 37% on puts. So that means 37% of these traders are betting against the stock. And so we also have Tesla for second place with 3 million in options volume at 66% call ratio and right around 34% put ratio. Palantir Technology has made it third place. Now, when we look at this page, we normally see it. Well, as long as we look at regularly, we know what stocks are normally on here and what stocks are not normally on here. And Palantir Technology is not normally on the top of the list. Sometimes we see it on the list. It's usually maybe in the middle, sometimes in the bottom, but it's definitely not number 3. And so that we got to consider that as unusual activity. So great one to put on our watch list. PLTR, Palantir Technology. It's not normally on the list. It's on here. It's up 6% for Friday with a 1.3 million options volume. We have a 66, almost 61% in call ratio, and that's about average. That's a good, healthy, seeing a 60-40. But then Amazon, number 4, normally it's like number 3. So with 1.1 million in options volume, or the Palantir had 1.3. And so Amazon has 70% options or a call percentage. And so that's pretty high. That's a little above average because, like I said, average is normally 40-60. And so as we're going into the holiday season, Amazon's going to probably show some pretty good, earnings, because we're approaching the end of the fourth quarter here pretty soon. It's kind of their hurrah. And so then going into January next month, it's a whole new earnings season. And now it's like not only going to talk about how they all did during the fourth quarter, but how they did for the entire year of 2024. And so they're going to say we crushed it. And so that is why the most likely that is one of the reasons why investors are investing early. Because buy on rumor, sell on news. They always like to get in early because they know what's going to happen before it happens, and that's one of the reasons why we have these these meetings. And so next was the super microcomputer, or SMCI. That was up almost 7%, but with a 40-60 put and call ratio. Pretty healthy looking there. AMD was next, then we got Apple, and so on. We'll just kind of look down and see if there's really any highly unusual stuff right here. Now we have Robinhood, the Robinhood app, which not that long ago was like $20. Now it's $41 with an 87% call ratio, and we know that as we approach a more of aggressive a bull market for the cryptocurrency, their people and their friends and family are going to share this application to take advantage of the cycle of the crypto cycle. And so we have another year of the crypto bull cycle. It's important though that we completely get out of all crypto by the end of 2025, because that is the end of the bull season, or the bull market, because for all of 2026 crypto is going to go down. It has to inhale, exhale, and that's when that's going to happen. And so then we want to buy back in at the first quarter of 2027, because that's where it's going to find its new bottom for that cycle. And so that's how it works every time. It's a 4-year cycle. First 2 years, crypto goes up. Third year, crypto goes down. Fourth year, just kind of plateaus, kind of find, it's just where everybody needs to try to find, their little entry point before the cycle resets. And so we've seen it every 4 years. And so any apps that partake, like Coinbase right here, is also going to be very active. I mean, even though Coinbase has a 68.5% call ratio, 31.5% put ratio, it's trending up. And so these are showing some pretty good activity. Now we have GameStop coming up, and it has earnings. GameStop, we don't always see it on the list until maybe it gets some kind of activity, or some news, or some social activity. And we have an 82% call ratio on GameStop. GameStop is $29 a share. GameStop ticker is GME. Just lots of great information on here. Now, if we want to see maybe a little bit more details of the individual calls and puts for the most active section of that would be under the option volume leaders. So we click on that. Let's take a look at Friday evening's most active individual calls and puts. And so NVIDIA is first place with a $150 call strike price that expires this coming Friday of December 13th. We have 102,000 in volume, with a 50,000 in options or open interest, which is a very, very good amount. Very good, healthy. Tesla is second place with a $400 call strike price. Very good, very bullish. Also at the same expiration date for this Friday, the 13th. It's not a good date, is it? With a volume of 88,000 and open interest of 32,000, very good amounts, because that means people are buying, they're holding on to it, and they're making a lot of money. I mean, even myself, I have the same call. I'm definitely in the money, but we're definitely gonna see some pretty interesting things. Even if you haven't seen it already, even there was a clip on Twitter X with Jim Cramer that was talking about how Tesla can easily get to $500 a share, and I'm like, oh my gosh, that's crazy. Their market value is just enormous right now. It was like 1.2 trillion dollars. So lots more Nvidia. We got 145, 147, 142 and a half. We got more Teslas. We have an Amazon. We have an $125 call. Looks like that one's already in the money because this share is at $127 a strike price. And so same expiration date. We have Palantir Technology, PLTR, which is currently at $76.34 a share. We have an $80 call strike price that expires this Friday the 13th. With a 42,000 in volume, fresh volume for Friday, and we have 10,000 in open interest. So that is huge. That is showing a lot more interest, and so this is telling us that people are buying this and they're holding on to it going into this coming week. So we need to make sure that this is definitely on our watch list. And so keep going down. We see a lot more other Amazon, Nvidia, and Tesla. A secret is a next thing here. We click on open interest because we want to sort it out by open interest, and then we want to click refresh on the browser to refresh the whole system by open interest. And now we have a much more information on here that we didn't have before. And so open interest, again, is basically the total number of open contracts for the previous day that have been traded but not yet liquidated via offsetting trades, meaning people bought these and they're holding on to them. They have not sold them yet. And so Nvidia, with the $140 call strike price that expires February 21st, 2025, with an open interest of 219,000, which dominates the entire options system, with the 3,240 in fresh volume, which could be a little bit of buying and selling activity, but for some reason there's a lot of people holding on to this one. And there's a lot more time. There's 76 more days until this one expires. And so there's another Nvidia, $150 one. So we have one that's in the money and one that's not in the money yet. So huge different price range. The 150 is definitely a lot more affordable. But those high rollers definitely, stay with the ones in the within the money. And so Lucid, LCID, is third place on the list, which is currently at $2.30 a share, with a $3 put, with an expiration date for next January 17th that expires in 41 days. Lots of open interest on that one. A little bit of volume. Then fourth place is Vale, VALE, with a call. Vale is currently at $9.36 a share, with a call strike price of $15, and with an expiration date for January 16th, but for 2026. So that's about another year and a month from now. With a lot of open interest, 133,000 with open interest, 1,400 in volume, so a little bit of buying, selling activity there. However, even if you're not into stock options, this is still highly valuable information, because you can still look to see where the money's going. We're not just looking at, or we're not talking about things and just guesstimating and whatnot. We're seeing where people's putting their money. We're talking about millions or thousands of dollars. People are betting that Vale is going to reach $15 by this time. Now, even if you didn't want to bet on that, you can buy it as shares And if it went from $9 to $15, that's like what, a 60, 70, 80% gain in a year, and you have shares and you can continue to hold it, longer than that. It could triple or quadruple, over the years. And so, but this is our radar. This is a much more valuable, bits of information that that kind of goes beyond where the majority look. And so going down the list, we got more NVIDIA, we got X, and X I believe is a steel company. And so but we have it's a put. We have currently it's a $38.45 a share with a $40 put strike price. This is considered in the money. And so, but it also expires this coming January 17th, in about 41 days from now. It's got a lot of open interest, a little bit of volume, but for some reason, there's another put on it. There's a $35 put. That one's not yet in the money, but that's interesting because as we get into next year, inauguration, new presidency and whatnot, we could see some interesting changes looking at these charts and whatnot. And so we're trying to lower the cost of things, lowering energy and lowering the cost of materials. We could see these type of material companies on the radar. And so, but other ones, like now we see AMC. AMC was a stock that was so anytime there's some kind of catalyst, like GameStop back in the day, or Dogecoin or whatever, there's always these copycats. There's always something that wants to be just like that. And AMC was the copycat for GameStop. And so and there was other ones in line, like BlackBerry and so on, and so, but those all got kind of kiboshed pretty quickly. But AMC kind of slipped through the cracks, was kind of the shadow of GameStop. And so, so occasionally we'll still see some activity coming from it, which currently it's $4.73 a share, but we have a $20 call strike price that expires in January 16th in 2026. So we have another year and a month from that. So that could also be something that people can buy as a share. They don't have to buy a call. If we went from almost $5 a share to $20 a share, you just quadrupled your gains. And so and then you can decide whatever you want to do from there. You can continue holding it, you can sell it, whatever. But people are betting that AMC is going to get up there. And not only do we have a $20 call strike price there, down here in the bottom of the list, there's a $27 call strike price that expires sooner in June 20th of this next coming year, 2025, or 195 days from now. That would be pretty interesting. A lot of open interest on that one. So if you add that open interest and the other open interest of that, 105,000, now we've got like 180, 190, we're almost 200,000 in total open interest with AMC. And so, but it may be, it's one of these things that I feel like it's flying under the radar. And we've done this before with GameStop. When GameStop was $3 and $4 a share, before it skyrocketed to $30 to $300 and $600, we found its unusual activity before it did that just by doing what we're doing here. And so, and we're starting to see some of this unusual activity with AMC. And so AMC has definitely got to be something on our watch list, even though I don't really participate in a lot of these meme stocks or these hype stocks, but it's still something that we cannot ignore because it just affects the whole entire market in other stocks. So we can't ignore it. we definitely have to put it on our watch list, but we can still, even if we don't, we can use it as a lottery play. It's not something we want to heavily invest in, but because it's very, very volatile. But we're seeing some very bullish investing in here, and again, we follow the money, we're watching it, and we're seeing some pretty interesting stuff here. So, but it's important that we look at this daily. This information changes with the stock market. Every 15 minutes these pages update, so it's good to refresh. And again, if you just entered, this is Friday at close information. So we're just looking at what's currently going on now before we dive into this coming week, so we can look ahead in the future. So we're always aware of what's going to happen before it happens. Now we do see SoFi on here, SOFI, which is currently $16.02. It's the only one that I see on here steeply in the money, with a $10 call strike price with a very long expiration date, January 16th. A lot of open interest on that one, so very interesting. Then we have Google, $200 call strike price that expires next January 17th. A lot of open interest, a little bit of volume. Rivian is currently at $13 a share. We have a $5 put. And so that is very, very low. And so, but this expiration date expires not next January, but the January 16th of 2026. So that's approximately 405 days from now. It has a lot of open interest, but Friday had a lot of volume. So we don't know exactly if that's buying activity or if it's selling activity, because going into Monday, we'll see what happens to the open interest, if it accumulates to that or if it subtracts it from the open interest. And so, but we do know that every quarter that these EV companies, the electric vehicle companies, will report their sales and delivery reports, not to be confused with their earnings reports. Earnings reports are usually scheduled throughout the quarter, but the sales and delivery reports, which comes from the factory, the manufacturers, usually come out within the first, second, or third day of going into the new quarter. So we need to make sure that we are completely aware of that, because investors here look like that they're starting to get ready to bet against Rivian, because they're betting that they're going to report bad sales and delivery reports come the first week of January. So that's just less than a month away, and so that's why they're doing it now, most likely. And so going down the list, we got another NVIDIA, we got JD here with which is currently at $37.18 a share. JD has a $50 call strike price, so it hasn't quite made it there yet, but we do have some time. January 17th of next year, 2025, or 41 days from now, has a good amount of open interest of 93,000, with a decent amount of fresh volume for Friday, right around 7,700. So going down the list, we got more NVIDIA, very popular one, but also a NEO. We haven't seen NEO on the list yet. Here it is, $4.61 a share, with a call strike price for $5 that expires next January 17th, or approximately 41 days from now. It has a very good amount of open interest of 91,000, and some good fresh volume for Friday for that one at 3,600. And so NEO is I used to call it a Tesla wannabe company. China tried to learn a lot from Tesla when it was over there, when it established their factories and stuff over there many years ago. I think like 10 years ago or so. And so they're kind of learning, but NEO was just kind of like their shadow. They're kind of they wanted to and they were building a few hundred cars, and they had some sales and deliveries. It wasn't a pipe dream. I mean, there wasn't like some of these other companies like Nikola and whatnot that had that was a pipe dream, and they never produced anything. And so and but they started to rise. NIO started to go from $5 to $10 and so on. But there was a kind of a joint effort. They bought American microchips and certain technologies to help their company. And so it's all about just kind of helping each other. And this was when Donald Trump was president. And so NIO went all the way up to like $70, $60, or I can't remember, it was like 50, 60, it may have touched $70 a share. And because they were getting ready to release lidar technology with their vehicles using NVIDIA microchips. Then all of a sudden, it was our election. Biden came into office, and he completely terminated the sales of American microchips to China. And so that cut, NIO was no longer able to use some of this technology. So it brought, a very interesting effect. With their stock, it went from $50 a share to $5 a share. Sometimes it dips down a little bit lower. So we're starting to see that this could possibly change now that that Donald Trump has been elected president again. We could see a new relationship with semiconductors with the country, and so as well as this company. And so we could see this rise again. And so right now, like I said, it has a very good amount of open interest, 91,000 with a $5 call strike price. We don't see anything crazy yet. So, it's kind of like to be determined. They're kind of, getting ready, $5, and then we could see $10 pretty soon, and then $20. So definitely NIO is definitely one that we got to keep on our watch list. And so lots of great information here, lots of great activity that we've seen from Friday. Let's look ahead into the future and see what's going to happen before it happens. And we can take a look at the earnings, with that as well. And so we'll scroll down to the list for earnings. And so earnings, if you don't see my screen, this is, go ahead and click on the little icons so that you can kind of see the most anticipated earning releases for this coming week. Got lots of great companies here. And I do post this in the top of the group page under the featured and announcements section. So when I have the top 10 earnings analysis posted, so we'll dive into that really quick. First one is the most anticipated. Number one for this week is Broadcom, and so they are, which the ticker is AVGO, and they're confirmed to release their earnings report for this Thursday, December 12th. After the stock market closes, and they are expected to beat their estimates. However, investors are bullish going into the company's earnings release with a 76% expecting an earnings beat. Option traders are pricing in a 8% price movement on earnings in either direction. Anything can happen, even though, with what percentage, but 8%, that is very, very volatile. Normally it moves right around 6.5% in recent quarters. However, on Friday, we did see a notable amount of calls, about 10,000 contracts of the $190 call strike price that expires this Friday, December 13th. And so definitely one to keep on our watch list, because it will most likely affect other semiconductor or technology companies. And so we need to make sure that we are completely aware of that. And then we got artificial intelligence. The C3.ai is confirmed to release their earnings report Monday, here tomorrow. And so, but after the stock market closes, their ticker is AI, which is pretty cool. And they are expected to beat their estimates. However, investors are bearish going into the company's earnings release with a 73% expecting their earnings beats. There's a clue there, bearish. Even though it's a 73% expecting an earnings beat, sometimes, when we look at this stuff, and when we look at the charts, we may see that the price is really, really high. And if we see that, then the share value may already be priced in, knowing that the stock is going to beat its earnings, because sometimes that happens. All of a sudden we see that it had beat its earnings, it had great news, but the stock's going down and people are confused. I don't understand, it's going down, it had great numbers and blah blah blah. Well, it's because people knew what was going to happen before it happened, and so that's why they got in much sooner rather than later, because we buy on rumor, we sell on news. That's why it goes down. And so sometimes when we see this, that's kind of like hey, proceed with caution, because it may be in that situation. Option traders are pricing in a 18.3% price movement in either direction, or the stock has previously averaged right around 14.5% price move. So option traders are expecting a little more volatility coming from this one. Could be because maybe we're at the end of the year. And so it's going to be interesting to see tomorrow, again, Monday after close. We're gonna, this is it. Hopefully, the day isn't going to be pretty stale, waiting for this moment to happen. Hopefully we'll see some pretty cool volatility. Now Tesla finished almost at 1.5, almost 2%, I think, during after hours. So that's going to be interesting to see where Tesla is going to go during pre-market. Next one is Oracle. ORCL is confirmed to report their earnings Monday, December 9th at approximately, at after close. And so they are also expected to beat their earnings. And so one of the things I like when I post these, I try to post something that relates, or I post the picture along with the article that kind of relates to the company. So if you're not already familiar or know the company, hopefully the picture can kind of give you an idea that they build a lot of software and cloud-based applications for companies. And so investors are bullish going into the company's earnings release with a 74.5% expecting an earnings beat, and so that's good. Normally average is right around 65%, and so 74% is definitely above average. So far looks good. It says beat, it says bullish, expected to beat, and then we have option traders are pricing in about an 8.5% price movement in either direction. Normally it moves right around 10.5% movement in either direction. And so, but it looks like option traders are expecting just a little less volatility, but still expecting some volatility. Now on Wednesday, November 27th, there was a very unusual amount of buying activity. 16,000 contracts of the $170 put strike price that expires December 20th. So sometimes we may have to look a little deeper into its most active individual calls and puts, and I use a website for that, as the NASDAQ website, and which provides a lot of valuable information on that. Where bar chart provides some pretty valuable information on the whole system. Going up to the next one, GameStop. This is going to be very interesting, very interesting. And there's another interesting thing I'll mention after this here, though. GameStop, GME is the ticker, is confirmed to release their earnings on Tuesday after the stock market closes, and they are expected to beat their estimates. Investors are bearish, however, going to the company's earnings release with a 51.7% expecting an earnings beat. It's basically a kind of 50-50, but investors are bearish, even though that, some analysts whatnot are expected to, with the numbers they're seeing, or expected that it should beat. I mean, it still could, but stock could still come down. But option traders are pricing it right around a 16.5% price movement in either direction. Normally it moves right around that, so it's a very volatile stock that we have to put on our watch list. Now on Thursday, December 5th, there was a unusual amount of buying activity on 20,000 contracts of the $30 call strike price that expires this Friday the 13th. And so it was just very, very interesting on that, but also one of you guys had mentioned to me the other day. He goes, "Did you see the post that Roaring Kitty posted?" And if you don't know who Roaring Kitty is, it's this guy. He's the guy who kind of created this whole momentum with GameStop when GameStop was right around $2-3 a share. He was just a little YouTuber, podcaster, whatever. Just kind of like enjoyed posting videos of himself online, and he got into stocks and he wanted to talk about a stock, and so he decided let's pick GameStop, and picked it and says I'm gonna invest in it. I like it, blah blah blah. And there's a lot more to it, there's a movie on it, there's a lot of stuff, but one of the things that a lot of them don't mention, even though that he says that he likes the stock, it was also the fact that we wanted to save the company from bankruptcy. And so there's, like I said, there's just a lot more to it, but but ever since then, GameStop went from $3 to I think almost $600, and then it started to kind of fall down. I think they did a split, and a lot of things have happened, but at the same time he disappeared for like a couple years. And so earlier this year he came back, but he came back with like memes and other things with subliminal messages. So it's very important that when we look at some of these things that we try to, it's like a puzzle. And I thought I had posted it in here somewhere, but I'll have to, here, I think I could probably do this here really quick here. Let me go into the chats here. I'll go to the Learning Center, and I'll upload something that's very, very interesting that he posted not that long ago to his Twitter X account. And so this was what he had posted. So there it is, Roaring Kitty, officially, blah blah blah. It looked like a Time magazine with like a screen of like a video or something or other, with a keyboard, yada yada. But there's this like time in there, like a time within the video. Like it makes it look like we got to go 1 minute 9, or maybe 1 minute 9 seconds within a 4 minute and 20 second video or whatever. Or what if it's not a time? What if it's a date? Of some kind. A lot of people are like, well, January 9th or maybe April 20th, yada yada. So, but some people believe that this may have something to do with GameStop. Especially with earnings coming up. We can decipher it however that we like. A lot of us can come up with probably different things, but I believe that with the whole GameStop thing, GameStop has the stock has been saved. It is what it is. It's going to do what it's going to do. I don't think that he's going to. I don't think he's trying to kind of resurrect the same meme stock. I think. It's almost like I think he wants to maybe create a new stock that's going to surge. So. Again, we used to have a lot of these meetings before, and occasionally we'll talk about cannabis. So 420 is kind of a code word for cannabis. So what if this was a date, January, coming up next month, January 9th, and then we have a cannabis code here. So what if January 9th, the feds, this is what I believe. The feds, the United States government is going to announce legalizing recreational cannabis from coast to coast. And so, and the reason why I say this is because in our previous meetings, some of you guys have been in our previous meetings. Some of you guys here are probably new. This may be your first meeting, but in our meetings in the past, when we've talked about cannabis, we've always talked about how cannabis will legalize in two different ways. The feds will either vote on it, which they've tried, and it may pass one channel, it goes through another one, and it gets declined, and so then they have to start over maybe the next year, next couple of years, or whatever. But during the meantime, there's another state, or maybe two or three, that will pass a state law to legalize recreational cannabis. Now, once the United States reaches over 50%, then it's a lot easier for the United States to make it almost automatic. Okay, it's time to now federally legalize it from coast to coast. Now, for 2024, that is when we reach 50%. We're at the 50% level. 50% of the United States has already legalized recreational cannabis. If we go into 2025, just one more state legalizes recreational cannabis, now it's much easier for the rest of the United States to federally legalize it. And so that is where I believe this is perfect timing. This can't be a coincidence. This has got to be perfect timing. So there's certain cannabis stocks that are very, very common, very, very well known, like Tilray, Kronos Group, Aurora Cannabis. There's another one I can't really think of right now, but these stocks are $1, $2, $3, I think $4. I think Aurora's like $4, had to have some splits, or reverse splits, to survive. But but these stocks, we could easily see these at $10, $20, $30, $40. That's 1,000% gain. However, we haven't yet seen that activity yet, because this is just fresh information. This just happened, like I said, days ago, moments ago, and I don't think other people have really deciphered this information yet, because I haven't seen anybody else talk about this, other than this is just a mystery. I mean, it is uncertain, it can mean a lot of different things, but this is, with my experience in this, with the stuff that we talked about, it just makes perfect sense. I mean, it could be a coincidence, but I don't think so. I think he's trying to say, okay, there's going to be some new hyped meme stocks coming up. Be ready. So if that does happen, we've seen this happen with those Canadian stocks. When Canada did that, they announced, okay, we're going to federally legalize recreational cannabis from coast to coast. Now, usually, it typically doesn't really go in effect immediately. They say that it'll legalize. It goes in effect usually the next year. So we have this amount of time between when they say it's going to happen to when it happens. Again, we buy on rumor, we sell on news. Hopefully you're catching my drift. So that means it's going to go up for that amount of time, and then when it does legalize, then it's going to plunge. Now, when you look at the charts for Tilray and Kronos Group and Aurora and all that, they did the exact same thing. They plunged because the market flooded itself with too much cannabis. There was too many growers, there were too many sellers and buyers and stuff. So they had to focus off the volume, and it's just by cheap selling, and it wasn't good. It wasn't profitable, and so we could easily see that here, because we didn't know what it was going to do, because it was a new thing. Cannabis to the market, this was new. It's like we didn't know if it was a long-term thing or not. And so, but obviously it was not a long-term thing. And so, but it is kind of a once-in-a-lifetime thing that we can be aware of. Again, we Benjamin Franklin once used to say, if what did he say? It's important that we well, it was a planning phrase. If you, it's important, or gosh, I can't remember. Well, and I kind of blended it up. So it's important that we plan our trades and we trade our plan. Oh, he said that if you fail to plan, you're planning to fail. That's what Benjamin Franklin said. So I just kind of used those two things together, and that's why it's always important that we figure out what's going to happen before it happens, so we can plan our trades, so we can trade our plan. That way we're aware of what's going to happen before it happens. And so sometimes we kind of get ahead of ourselves, or we get a little bit of information prematurely. But if we just focus on what's going on and have an open mind, we have a pretty good idea of what's going to happen. And so it's just really interesting. So I just wanted to mention that those two things really quick, because this is all stuff that's going to happen. This is stuff that's going to go down this week or this month and next month. And so just be ready. And so the next one is Adobe. Adobe, huge company. And so Adobe, their ticker is ADBE, and they're confirmed to release their earnings this Wednesday, December 11th. After the stock market closes. They are expected to beat their estimates. Investors are bearish, however, going into the company's earning release with a 77% expecting an earnings beat. So they're bearish, but expecting a beat. Very interesting. So it's important to look at the chart, see if the price is too high, because maybe the price, the share is already priced in, knowing that they're going to beat their earnings. Investor or option traders are pricing in right around 8.5% price movement with Adobe, where normally it moves right about 8%. So they're pretty spot on there. Now, Thursday, December 5th, there was an unusual amount of buying activity, or almost about 7,500 contracts of the $700 call strike price that expires on Friday, January 17th of next year. Now, here's another one, MongoDB, or the ticker is MDB, and they're confirmed to release their earnings Monday after the stock market closes, so tomorrow evening, and they're expected to beat their estimates. Investors are bullish going into the company's earning release with a 79.5% expecting an earnings beat. That's almost 80%. So far, that is the highest percentage expecting an earnings beat. So far, we're expected to beat. The investors are bullish, looking good. All the stars are aligning. We see that the option traders are pricing in right around a 15.5% price movement with this, and they're bullish. So they're expecting this stock could easily jump up. Now on Thursday, on November 14th, we did see an unusual amount of buying activity, right around $7,500 contracts of the $220 put strike price. So there's our little curveball right there. But this expires Friday, January 17th. Doesn't really mean anything, but these investors are still very bullish, but we do want to make sure we're looking at the majority of MDB's most active calls and puts. Looking at Costco, our cost for their ticker is confirmed to release their earnings on Thursday, December 12th, after the stock market closes, and they're expected to beat their estimates. Investors are bearish going into the company's earnings release with almost a 84% expecting an earnings beat. That's really high. So again, another one, we want to look at the charts, see if they're one of the ones that just have a very high stock price, because most likely the price is probably priced in. And so option traders are pricing in right around 3.5%, almost a 4% price movement in either direction. Normally it moves right around 3.5%. Monday, December 2nd, there was an unusual amount of buying activity, almost 4,000 contracts of the $1,100 call strike price. So another one to kind of take a closer look at. And then we have Macy's. Macy's coming up. M is the ticker, and they're scheduled to release their earnings on Wednesday, December 11th. In the morning before the stock market opens. They are expected to miss their estimates. Investors are bullish, however, going into the company's earnings release with a 71% expecting an earnings beat. We're seeing a lot of high percentages here today. Option traders are pricing in a 10% price movement in either direction, where normally it moves right around 7%. Now on Monday, November 18th, there was an unusual amount of buying activity of contracts, 7,000 contracts of the $14 put strike price. So another one we want to take a closer look at. That had a expiration for Friday, January 17th for 2025. Next one is the Planet Labs. That ticker is PL. They're confirmed, or they're scheduled to release their earnings on Monday. So that's tomorrow after the stock market closes. They're expected to beat their estimates. Investors are bullish going into the company's earnings release with a 71.5% expecting an earnings beat. Option traders are pricing in right around a 33.5% price movement in either direction, when normally they move, or recently they've moved right around 16%. So out of all of them, this is the one that's expected to be the most volatile stock. And so as a lottery play, I would probably straddle this one. I mean, 33% price movement either this way, it's like you can't lose. And so if you don't know what straddling is, it's related to stock options. So that's where you're betting a stock goes up and down at the same time. I know that may sound conflicting. Why would anybody bet a stock goes up and down at the same time? It's because you can only lose what you have on one side, and your gains on the other side are potentially unlimited. For example, let's say for worst case scenario or something like this, you have a stock, it moves 30% in either direction. Doesn't matter if it's up or down. Let's say you lose negative 99% of whatever on one side. Your gains on the other side could be 200%, 500%, 5,000%. So what that's doing is outwashing your loss on the other side, and it's putting you way ahead. I mean, it's like cheating the system. I don't understand why people don't do it more. I do it on a daily basis. And so this is definitely one I'm putting on my watch list. I'm definitely going to do it. I'm not going to go heavy because if it doesn't move when we're doing earnings, if you're doing options with earnings, if it doesn't move, then you'll experience what's called an IV crush, or it's also known as implied volatility crush. This is where it greatly devalues your stock because you thought that it was going to move and it didn't, and so it's like a penalty, and so but it just greatly devalues and so if it doesn't move, that's what's going to happen to both the calls and the puts, and so but that's why I call it a lottery play. You just put a little bit in there, not a lot. If you lose all of it, it's not going to be, something you're going to be, worried about. But that's a very good one to put on our watch list. Keep an eye on that one. Next one is the Toll Brothers. TOL is the ticker, and they're confirmed to release their earnings on Monday after the stock market closes. And they're expected to beat their estimates, which is good, as well as the investors are bullish going into the company's earnings release with a 77.5% expecting an earnings beat. Very good, very above average. It's good. Option traders are pricing in right around 8% price movement in either direction, where normally it moves right around 4%. So option traders are expecting a little bit more volatility from TOL. Now on Monday, November 25th, there was an unusual amount of buying activity on this, 585 contracts. That may be, I know that's not a lot, but that's kind of unusual for this stock. It has a $170 call strike price that expires Friday, January 17th of 2025, and so very interesting. Now that is all of the top 10 earnings releases. And then so the next thing that's important that we always want to look into is the investing.com website for a couple different things. First thing, we can look at the top 5 things that they feel that we should all watch that will provide a lot of volatility to the market as well as to the economy. Now, so the inflation data will shape the expectations for the path of the Federal Reserve interest rates and test the record stock market rally. The European Central Bank meets, and could Bitcoin be poised to go mainstream after breaking through the $100,000 barrier? Here's your look at what's happening in the markets for the week ahead. Now, number one is the United States CPI report coming up this week, which we'll dive a little bit more into. But it does say the United States is to publish November data on the consumer price inflation on Wednesday that will give Federal Reserve officials a last look price pressures ahead of their final policy meeting of the year the following week. The Fed has cut interest rates by 75 basis points since the September, and markets are currently expecting another 25 basis points cut at the December 17th and 18th meeting. Not happening this week, but that'll happen next week, that we can talk more about later. Now, bets that the Fed will cut rates again were bolstered by the Friday's stronger than expected job reports, but any indication that that progress in returning inflation to the Fed's 2% target has stalled would likely see markets revise expectations. Concerns over a potential revival in inflation have also returned to the fore because of the President-elect Donald Trump's plan to raise tariffs on imports. Tariffs are expected to be inflationary, which a lot of people talk. A lot of people talk about tariffs, but they don't talk about how energy costs are going to go down. And so when energy costs go down, we're going to flood the market with oil. We always go through these oil inventory level reports, and we always basically see that they're always hovering right around zero. And so that basically shows, the Biden administration basically shows that the oil is hovering right around zero, making it look like we have a low supply and a high demand, so we have a high energy costs, and then the shipping and transportation costs goes up, and that's factored in everything. So if we flood the market with oil, we're going to soon see the oil inventory levels. They're going to be flooded. We're going to have a high amount, so it's going to make it look like we have a high supply with a low demand, and so inflation is going to come down with that. If tariffs make things go up a little bit, overall everything's going to be much lower, and so that is to be expected. So number two, stock market test. So the S&P 500 and the NASDAQ composite rose to record closing highs on Friday as the expectations for further Fed rate cuts during a period of robust economic growth continued to underpin investor sentiment. The scenario historically has produced strong equity gains, and it was supported by Friday's jobs data. Wednesday's inflation report will test the strength of the United States stocks rally into the year end. If the data comes in hotter than expected, the Fed could temper expectations around the future path of rate cuts, which is always interesting. And I want to point out something really quick, just a little a tip. A really cool feature. So if we go to Google, we just type in investing.com interest rate decision, that'll take you to the page that will provide a lot of this information, not only from the history, but also what's scheduled to happen. I mean, we can see the graphs of the interest rates and whatnot, but what I want to show you is the schedule, because again, it's always about knowing what's going to happen before it happens. That way it gives us the advantage. And so in the first week of January is when they released the schedule for the interest rate decision meetings. And so we had all these, so we knew what was going to happen before it happens, but we don't have a forecast yet. The forecast is usually populated on there typically within 1 week before it's scheduled to be released. So it's important that we revisit this page, regularly as we approach this date, December 18th. That way we have a good idea, because normally the forecast is right. The only time I've ever seen it wrong was on the September 18th. It said that it anticipated that the interest rate was going to start coming down
from the federal rate with 5.5 to 5.25. It went down more than that. It went down to 5. So they took a 0.5% off, but it's been right. It's continued. I mean, this thing is, like I said, is pretty spot on, and so that's why it's important to look. This is like our crystal ball for this. Now, the tip that I want to let you know too is that, again, as we approach this coming January. So within the first week, we got to make sure we're looking at on the first. We've got to look on the second, the third, until it pops up the schedule. If there is going to be a schedule. If there's not going to be a schedule, that means they're not going to continue with the interest rate easing. They're just going to leave the federal interest rates where they're at. I don't believe that's going to happen, though, because we're not seeing an increase in sales for the automotive sales or the housing sales. And there's ways, we can look at that through investing.com, but we won't do that right now. But like I said, this is this is an important page that we have to look at regularly, as well as the coming up into the new year. Okay, so going back to the top 5 things to look ahead here for this week. Number 3, ECB rate cut. So that is the ECB holds its final policy meeting of the year on Thursday, with economics overwhelmingly expecting another 0.25% rate cut, which would be the 4th such cut this year. Now, the Eurozone inflation ticked higher in November, but still appears to be heading towards the EBC's or the ECB's 2% target. The ECB is also to publish updated growth and inflation forecasts, which are likely to be revised lower for next year. Since the ECB's last meeting in October, tariff risks for Europe have risen after Trump's election win. France and Germany are grappling with the political turmoil. Business activity has slowed sharply, and the euro has weakened. The ECB President Christine Lagarde has said a trade war would be a net negative for all, not just countries targeted by the U.S. tariffs. Now, number 4, Bitcoin record. Now, the Bitcoin, the world's largest digital currency, surged past $100,000 milestone for the first time on Thursday after Trump announced crypto veteran Paul Atkins as his pick to the head Securities and Exchange Commission. That's just a coincidence. Trump also announced that he plans to make former top PayPal executive and crypto evangelist Dave Sachs White House AI and crypto czar, raising doubts over who exactly will drive the policy. While both have urged regulators to adopt a more lenient approach, neither appears to have taken a positive or a position whether crypto tokens should be considered securities, commodities, or utilities, a key issue that will shape the industry's regulatory framework. So that'll be really interesting. Though, let's talk about crypto a little bit. I'm going to upload something really quick here. Give me a moment. But within our past meetings, I always like to remind everyone here that again, cryptocurrency, our stock market, and our economy all have cycles, just like our weather. We have 4 seasons. We have a winter, we have a spring, we have a summer, then we have a fall, and then it repeats itself, then it over and over and over again. So that we know what's going to happen before it happens. People plan ahead with vacations and trips and yada yada, holidays, and so the economy, the stock market, and cryptocurrency have the exact same type of scenario where they have these seasons, they have these times where things happen. Cryptocurrencies is a 4-year cycle, and so I'm going to pull up I think the best it may not be exactly what's going to happen, but it's pretty spot on with the previous cycles for cryptocurrency. And so the each of these lines are represent a year. And so the bull market, which typically happens, is usually about a year and a half long. And so it pretty much started, earlier, like in the middle of this year, 2024. Let's see, April, June, maybe May, something like that. And so we see how, and I posted earlier, I think it was like in 2023, during the accumulation phase. I posted, we've reached the bottom, we've entered the accumulation phase. This is the price of cryptocurrency will never be this low again. And so Bitcoin right around that time was like $16,500, $16,800. And so, and it slowly, picked up 20, 25, 30,000. And then earlier this year, it really jumped up to that 40, 50, $60,000 area as we approached the bull market. Now, this line here represents the end of the year. So this is kind of our $100,000 area here. Now, going into next year, 2025, that's when we're going to really see Bitcoin go up. We're going to see it reach that 200,000, maybe even $240,000 by the end of 2025. So that means we do not want to hold any kind of cryptocurrency for 2026, as 2026 is the bear market. It is going to come down, and we definitely do not want to hold anything. We want to get back in 2027 during the first quarter as the accumulation phase begins. And we'll all recognize this. We'll announce it. We'll announce when we've reached the top. We'll announce when we reach the bottom, because the timing may be impossible to time, but it's very noticeable when it happens. And so that way we can spot it and announce it. And just that way everybody is aware. And so, so and I just uploaded this into the learning chat room. So it's a great one to have on hand if you don't already have it. And so number 5 is the okay. It looks like there's a little bit more here. So for the number 4, the Bitcoin here, while numbers like $200,000 are already being mentioned for 2025, the history of Bitcoin is littered with record rallies and equally stunning reversals. And so just stuff that we've already talked about. So number 5, last but not least, oil prices. Oil prices fell by more than 1% on Friday, cementing weekly losses amid expectations for a surplus or a supply surplus next year on the back of weak demand, despite the OPEC decision to delay output hikes and extend production cuts to the end of 2026. The Brent crude lost over 2.5% for the week, while crude oil declined about 1.25%. OPEC agreed on Thursday to delay the start of planned output increase by 3 months to the April 2024 and extended its existing production cuts until the end of 2026. But the energy traders said the move failed to offset worries about weak demand, particularly in China, the world's second largest oil consumer. Oil prices have been range bound in recent weeks, with geopolitical tensions in the Middle East partially offset by concerns over global economic growth and China's sluggish recovery. But another thing I want to point out too is how important it is that we look at our scheduled economic reports. Just another thing to always be aware of before it happens. And so when we go to investing.com, and there's also an app that you can download through your app store, but it's important that we find the economic calendar, because that will provide us a highly amount of valuable information of what's scheduled to happen for this week. Now, when we get to the economic calendar, you're going to see a lot of gibberish, or it may seem pretty gibberish to you, but we want to click on filters. We want to clear it up a little bit. Something that you can easily see a little better and understand. And so when we click on filters, we want to click clear all, just clear it all. there's only two things we want to select, and that is the United States. And then under importance, you'll see 1 star, 2 stars, and 3 stars. You want to put a check mark under 3 stars, then confirm that you have a check mark under the United States, 3 stars, then click apply. And what that does is you're telling this system to pull everything that will have the biggest impact on the United States stock market for this week. And so so typically we'll see a lot of things scheduled for Tuesday, Wednesday, and Thursday. We don't see anything really scheduled for for Monday or Tuesday, but we see a lot scheduled for Wednesday and some scheduled for Thursday. And so Wednesday, this is basically telling us be prepared for probably the most volatility for the week is going to be on Wednesday. And so how we look at this is we start from the left, starting at the time. So and by default, no matter where you are, most likely this is probably, as we're looking at it on the website, it's going to default to the Eastern time zone. And so, but if you're looking at it on your mobile phone, it's going to default to your time zone. So make sure that you are aware of when, if this report is going to be reported before or after the stock market opens. So, for example, if this is Eastern time zone, stock market opens at 9:30 in the morning. And so these the first three, these reports are scheduled to be released at 8:30 in the morning, so 1 hour before the stock market. So that tells us be prepared for a lot of volatility during pre-market. So the three reports that we have is the core CPI, then we have a regular CPI and another regular CPI. But this one says MOM and for the November, which means month over month for the month of November. The same thing with this one, month over month for the month of, and then Y is the year over year for from November to November or whatever. So right now, as we're looking at it, there's no forecast. That is very valuable information because we need a comparison between of kind of what it's forecasting. Is it forecasting that it's going to be less or more than the previous? But they haven't provided that information to us, which means we have to look at this again within the coming days. So we got to revisit this on Monday. We need to look to see are they expecting it to go down or up. Now, for most of these, if it's expected to go up, if it's expected to be higher than the previous, well, that should, for the most part, provide bullish characteristics for the morning. If it's forecast to be less than the previous, that's expected to be bearish. Unless if it's something like crude oil inventories or the initial jobless claims, which is the unemployment level, we need these numbers to be down for it to be bullish. If they're up, then if oil's up there, then that means people aren't driving. It's not helping the economy. Because look at this now. From last week, it was negative 5 million barrels. Because the United States is not producing enough oil for itself, we're buying oil from Canada. They're producing it there, and so using some American companies and Canadian companies, and so we're just not doing it really internally. And so this has proven my point that the Biden administration makes it look like that we have a low supply with a high demand. And so it's very easy, and that's why the Republicans are saying that they're going to flood the market with energy, and it's just going to solve a lot of problems. So we should start seeing this. But when it's down, when it looks like that, it just makes it look like it's time to invest in the oil companies, and because this is. This is good. This if people are driving, it helps the economy because they're spending money on other things. And so if it's up, then that means it's probably time to sell oil companies, or because it makes it look like nobody's really consuming oil. But that's where we see the lower gas prices, and consumers like that. So it's kind of a catch-22. It's black and white. It's right here, negative 5 million barrels. But when we see that, it jumps, it bounces. You know, 1 week it's high, 1 week it's low. Now again, if this is low, that means that this next report should be high, which would be bearish. So we don't need a forecast for this one because we already know it's a no-brainer. And so the crude oil inventory should be a bearish. But the other thing that's important to point out is that the more rare the report is, the more volatile that it's going to be for the market. And what I mean by the more rare the report is how often it gets reported. Unlike the crude oil inventory levels or the unemployment levels, these are a weekly report. So they're always every week. Unlike these ones are monthly, yearly. You know, we don't see these ones that often. So these are the ones that are going to really hit the market, the stock market, the most. And so that's why we need to really revisit this to identify the forecast. Now then we have the 1 or a 10-year note auction, which a very unusual one we don't see very often. Now the crude oil inventories. I also want to look at the time on this. We see that it's scheduled to be released at 10:30 in the morning. That's 1 hour after the market opens. And then we got 1300 hours, and so that's going to be 1 o'clock in the afternoon Eastern time, and so that's going to provide some nice volatility as we approach the power hour or towards the end of the trading day for Wednesday. So again, Wednesday is packed with a lot of events, not only economic events, but earning events. Before and after. And then Thursday, December 12th, we have the unemployment report or the initial jobless claims. 8:30. Both of these reports are 8:30 in the morning, 1 hour before the stock market opens. We do see that the unemployment report is the previous report was 224,000. Forecast is not yet populated, but we should see that here. Probably it could be later tonight, maybe tomorrow morning. But we should see a little bit more forecast data here. But then we have the PPI for month over month for November, so that's also going to provide some great volatility for Thursday pre-market before the stock market opens. So, but just know that Wednesday is going to be a very volatile day, and if you like to straddle like me, that is going to be an amazing day to straddle. Some calls and puts. So that looks good there. What else? Yeah, I think that covers it. Other than that, yeah, that